So good morning, everybody, and welcome to this webinar with FX Street. Thank you, everybody, for joining us today. I know that people are very busy, so giving us your time is very much appreciated. What we're going to do in this webinar is I'm going to show you an uber or super simple currency trading strategy, one that's going to be useful for both novice traders and also experienced traders alike. It amazes me sometimes how much, if you see, people emailing you or things written on forums, and how everybody's always trying to complicate things so much. It's almost like traders, they feel that the more complex the system, the more rules that they have, the more indicators, the more, the better the system will be. They're always trying to kind of fine tune it so that they can eliminate the majority of the losses, or they can get in at, the very bottom of the move and sell at the very top of a move. And unfortunately, that's sort of the road to ruin as far as trading is concerned, because what you will find is that you will still be here in 3 years' time, in 5 years' time, watching webinars like these, trying to find that magic indicator, that magic system that kind of does everything for you. Unfortunately, trading is not like that. So one of the things I really want you to start to own today, before we even get into the strategy, is the fact that you don't have to be perfect, right? We kind of just good enough, all right, most of the time will get you into a position where you're going to make money. You don't have to be absolutely perfect, and the setup doesn't have to be like the best setup you've ever seen, because more often than not, when you're trading at the hard right edge of the screen, the setups don't look perfect. They only look perfect after the fact, when you can see all of the different elements to it. But when you're trading right at the edge in the live markets, sometimes you need to accept that things are a little bit less than perfect. But as long as you're taking the overall market context into account, as long as you're looking at the price action and the story that the chart is trying to tell you, then you should put yourself in a position to be able to make money. Okay. So in this morning's webinar, I'm going to teach you very quickly a very simple, very straightforward strategy that you can use as quickly as this afternoon to start making money in the markets. Now, the charts that I use are a 15-minute chart for this. Okay. And this is something that I learned probably, where are we now? 2017, a good 12 years ago. Okay, so 12 years I've been using this strategy here, and it's very effective. It hasn't really changed over time at all. So you'll be happy to know that, you'll be able to use this for the next 5, 10, 15, 20 years. And it's also quite an active strategy, or the way that I trade it is active. Okay, so if you're somebody that can't sit in front of your screens all day, then you might want to do this on a higher time frame, so you can apply the principles that I'm teaching you on a 60-minute chart. You could apply it on a 4-hour chart. You could even apply it on a daily chart. But I primarily use this strategy on a 15-minute chart. I have other strategies as well. So full disclosure, this is not the only strategy that I trade, but it is one of the main strategies I trade when I'm sat in front of the screen. So we use a 15-minute chart. Okay, I have two charts, as you can see in front of you. I have one which is a candlestick chart, which shows me all of the information. So those of you that are new to trading, a candlestick chart is a very effective chart, because what it does is each candle represents a period of time. And in that period of time, it tells you 4 key pieces of information. It tells you what the market opened at that particular time, what it closed at, what the high is of that particular period. So let's take one with a high and a low. Let's go over this here. So this candle here, it shows me that the candle opened up at 0.9988. It traded down to 0.9981. Okay, its high was 0.99887, so just a little bit above, and the low was 0.9980. So one candle gives us a lot of information about what happened for that particular period of time. However, the way that we trade this strategy, we're not as interested in specific candlestick formation patterns as we are more the overall picture of the market. And that's why we also have down here a line chart. Has anybody here ever used a line chart? So the line chart doesn't give us anywhere near is the amount of information that a candlestick chart does. The line chart literally only tells us the closing price for a particular period in time, which is all you really need when you're trading this strategy. Yes, you can add more information, which is why we have this chart up here above us so that we can see where the highs and the lows are. But ultimately, to be able to, or not to be able to trade the system, we don't need a lot more information than that. What we're trying to do always as traders is we're trying to figure out where is the price going, right? It's as simple as that. That is all we need to understand. Where is the price going? Because if we know where the price is going, then we can take a position based on that. So we can trade in the direction that the price is moving and we can make a profit. Does everybody agree with that? Trading doesn't need to be more difficult than that. So primarily, we will actually be using a line chart. Okay, and looking at the line chart here, hopefully you can see that when a move starts to take place, it's actually quite obvious. So when a move gets underway, we use our normal technical analysis, and I'll go into that in a minute, so support and resistance lines. But when a move starts to happen, okay, it's more pronounced and it's easier to see. Having said that, if you're someone that's not comfortable with this and you want to apply these techniques to a candlestick chart, you can absolutely do the same. There's no problem with that at all. And actually, I refer to both of them, which is why I have both of these on my screen here. So I can see the candlestick chart and I can see the line chart all at the same time. So how do we go about trading this? Well, we're trying to trade in the direction of the momentum, right? Now that is very, very different to saying I'm trying to trade in the direction of the trend. Because if you're trying to trade in the direction of the trend, then oftentimes by the time you've figured out that there's a trend there, you've already missed the move. So it's much, much better to look at the most recent move, okay, and trade in the direction of that recent move. Now that might be trading with the trend, that might be trading against the trend. You will use all of the different tools that you have available to you to be able to determine what that is, but ultimately we want to be trading in the direction of the momentum. So for example, looking at this chart here, we had a trade where we took a breakout of this range here, all right, which is nice, but now we see the momentum is to the downside. So now we're going to be looking for opportunities to sell the market, all right? We're looking for opportunities to sell. So the next question is, how do we identify this, all right? Well, I have a 100 moving average on my chart there. That's kind of just for to make things easy to look at. It's not something that we would necessarily take our trades based on, but I have the 100 moving average so that when I flick through charts, I can kind of see where price is in relation to that moving average, which gives me a quick glance of the context of the chart. But in terms of trying to figure out which way you want to trade, the key is all about getting the right amount of information on your chart to be able to make an informed decision, right? So we're trading on the 15-minute chart. Therefore, we want to be trying to figure out where the trend is and where the momentum is on the 15-minute chart, right? So if we were to go back to when we were in this range here before we took this trade, the range started sort of around here, right? We were looking at the market here. We can see that the market broke through the support level down here and we had momentum to the downside. Then it started to pull back and go sideways. When it started to go sideways, we were happy to take the trade in either direction of the breakout zone, okay? But we were more inclined to look for a short opportunity because the previous momentum had been to the downside. So logic says that the market is stronger on the selling side than it is the buying side, and they will probably win out at least just a little bit, even if the market were to turn around here. So you as a trader, when you set up your chart, when you come up to your trading station, the first thing that we want to do is start looking at the key support and resistance levels and see where we can trade from. That might be horizontal lines of support and resistance, like these things here. Okay, horizontal lines basically just let you sort of bracket highs and lows, and it obviously projects it into the future. So they could be horizontal lines of support and resistance. You could also use sloping lines of support and resistance, so things like trend lines, like this, for example. So looking at this price action here, now that the market's broken down, but it seems like it might be moving sideways, I would be more than willing, let's zoom into here for a minute. I'd be more than willing to take a breakout of this trend line to the upside. But I don't just do this because I fancy taking a trade to the upside. I'm looking at all of the information on the chart. And if I look at this information, what is it telling me? Well, it's telling me that it tried to break down. We can see this. The market's gone down. It's tried to break down. It's come down and it's broken this low. It's failed to break this low, sorry. If the market now starts to turn around at this point, after failing to break that low, with all of this momentum, all of this selling power down here, it's failed to go any lower, and it breaks up above this trend line, then it's telling me something, right? What's the market telling me? It's failed to get lower than the previous low, which means that there are obviously the sellers are not committed as much as they were on the previous time that they sold the market. They're not as committed. They don't fancy it. It could also mean that there are more buyers down here. So there are more people that are looking to take the market higher because they feel that the price is cheap in comparison to where it could be. Right? And this is all of the information that we need to take in as traders. And I know, you know, most retail traders, they'll look at things and they'll think, well, I want something that's, you know, A, B, C, do this every single time. I don't want to engage my brain. I just kind of want to, you know, I want something where I don't have to think at all. And unfortunately, if you were to do that, you're going to find yourself in a position where you're not going to make a lot of money. You're going to lose money. So we need to kind of talk ourselves through the story. So I've come up to my charts in the morning, right? Like we are right now. I've seen that we've had this breakout. So let's get rid of these lines here because that breakout has now taken place. What could I possibly do here? What sort of a trade could I take? Well, I could bracket the bottom of this here. I could say, well, I'm not willing to trade here, but if we get a break below, I would entertain taking a short below this level here. I'm well within my rights to do that. I could also say, and what I'm sort of more inclined to do is say, I'm waiting for a breakout of this trend line. I would like the market to come up and break above this trend line here. Why? Because looking at the story of the markets, we can see that we've got a downtrend. However, this last move down has failed to break beneath this level and it started to move up. So that's telling us, as I said, that the buyers in the market are more committed than the sellers in the market at that point. All right. So in terms of rules for the system, because I know that I'm talking you through a lot of things here and I'm probably not doing a very good job of giving you specific rules. First thing you want to do, you pull up a 15-minute chart. All right. That's number one. So write this down. Okay. I'll give you a minute to get a pen and paper and then you can write this down. Are we good? Okay. So we trade on the 15-minute chart. You can trade any currency pair that you like. In fact, you can trade any instrument that you like. We trade on the 15-minute chart. I have a 100 exponential moving average on my chart to help me sort of get an idea of the direction. All right. I use a line chart and a candlestick chart. So I'm not just using this candlestick chart here. I'm also using this line chart. And actually, more often than not, I trade just from the line chart here because it's just a hell of a lot clearer. Okay, but we've got both. So we have our line charts and we have our candlestick chart. Once we have that, we've got all of the tools that we need. All right, we don't need any other technical indicators. The only thing that you will put onto your chart after this point are horizontal lines of support and resistance or trend lines. Maybe some Fibonacci if you like that too. If it's something that you believe in, then you're absolutely within your rights to do that. Okay. So we put those on our charts. We then come to our charts, and what we now need to do is try and find some sort of price action. We need to try and figure out which way is the price moving. Sometimes it's not that obvious, and if it's not that obvious, then we just move on to the next trade. We don't sit there and try and force something. If it's obvious, then we take the trade. So looking at this here, as I said, we've got this sloping trend line in there, and the reason that it doesn't look like it's touching is because actually The line chart is only the closes. So remember that these are the highs of the candles where they would be over there. Now, once we've got our lines in from where we want to trade, right, then we're looking for the entry. Now, the entry is very, very simple. Very simple. The entry is the market closes outside of your line. Do you hear that? So we wait for the market to close outside of one of these lines, and then we take the trade in the direction that of that close. Literally, that's it. The market, now you can get more sophisticated later on. Once you get experience at this, you can start looking at like 1, 2, 3 reversal patterns, maybe like a breakout and a pullback type affair. You can get more sophisticated, but right in the beginning, let's make it super simple. Let's make it very, very straightforward. A close outside of the line, you're in. As simple as that. Okay, so once the market, if the market were to close above this trend line here, I would then take a long. I would place my stop behind a technical level, so like a support or a resistance level, if I could find one. If this was the closest one, then actually I'd just opt to put it below that level there, where we've got sort of like this pivotal. Let me put a. So if the market broke through from up here and there was no other level, I would use this one here. That would make sense to me. Okay? Then I'd be in the trade. Here's an example of one we took earlier. Okay, so this is the Aussie franc. As you can see, we had an uptrend there. We were trading this to the upside, but I also had this sloping trend line in there, knowing that when it broke that trend line, I was going to be looking to take a trade. Literally, the market breaks a trend line, closes below there. Wonderful. All right, we have our stop in and above this level here, which is this previous level of resistance there. And then as you can see, the market then falls off and goes off to our profit target. What do we want from a profit target? We try and aim for 1-to-1. It's roughly what we go for. If we have to take less, then we're happy to, then we'll take it. That's not a problem. All right, but initially we're going for 1-to-1. If we can get a bit more, then that's just a massive bonus for us. Okay. So let's look at some others. Oh, and if you want to take what's the word for it? More of the market. So put more of the market context into here. If you take a look at this on a 4-hour chart, you will see that that trend line there. Oops, is it the 4-hour or it might be the daily? Here we go. So is it this level here? Nope. Hold on. There was a level in here, which I won't be able to find, obviously. But basically, it was a big sloping line. Okay, I can't find it. There was a line in here. So we had, wow, that's embarrassing. We had an additional bit of confirmation in there as well, which is always nice to see. You don't have to have it, but of course, it's nice to see if you do have it. Okay. All right, let's move back. Oh, hold on. Here it is, I think. Here it is. There we go. It was on the it wasn't on the daily. There we go. Okay, so we had the market bouncing off of this all of the time. It came back up to that level. We had this in here. It just made sense to take the trade. Okay. So let's move on. Go back to our 15-minute chart. As I said, the 15-minute chart is just the one that we like to trade. You can choose whichever one suits you. So for this one at the moment, we've got an upward sloping trend line. The momentum was to the upside, but it seems to have kind of dropped off a bit. And now we're waiting for the market to break lower. All right, we had an initial entry in down here when the market closed below, stops in above there. We actually came out of this a little while ago. So we've got a longer term position on this, but from a short term perspective, we came out before it got up to this high, which now looks like a mistake, but c'est la vie, what can you do? And then you'd wait for the market to break lower. If the market breaks beneath this level here, then we'll add another one to our position. Looking at the Aussie New Zealand, we can see that momentum again is to the downside. We have this trend line here, but it's unlikely now that the market's going to get to that level. So what do we want to do? We need to figure out where the next most likely trade is going to be. And I can see that I've got a lovely support level in here. All right, support level is an area where the market has come down to. It's failed to get any lower, and it turns around and moves off in the opposite direction. But there are lots of stops behind these levels. So if the market can get beyond that level, then it's going to be a great indication that it's going to continue going short. So the most obvious trade right now for something like the Aussie New Zealand is actually a break beneath this level here, and you stop above the highs. Are there any questions about this approach? All clear, Crystal? Crystal clear. So should we go on and look at some other charts, some other trades that we can potentially take? Okay. So Aussie dollar, we've missed the boats on this one here, on this initial trade there. Let's take away that trend line. So we have this supports level in here. The price action for this is a little bit untidy, to be honest with you. And there's no real trade in the Aussie dollar that I can see that's worth taking. So let's move on to the CAD franc. We've got a lovely support level in there. So if this were to break lower, this would be a great point to take this lower if we get a close beneath that level there. Do we think it's going lower or higher? I mean, we've got kind of got the lower highs and lower lows going on here, but it did reject this level. So really, this could go in either direction, which is okay. It's not a problem at all. We're happy to take it in either direction. Just wait for the close, bracket our range, wait for the close, make money. Simple as that. And what you want to try and do once you're in the trades, let's say, for example, we do get in here. We want to try and take profits before this high there. You don't want the markets to have to do anything amazing for you to make money. Okay, you just want them to retest ground that they've already been on. Make sense? And also, if you're trading longer term trading systems, it doesn't have to affect that. Okay? So you can trade this in tandem with your longer term trading systems, even if it's against the direction of your longer term system. So even if, you know, for example, you are long the CAD yen, it doesn't mean that you couldn't have taken this short over here that's set up when the market broke through. Again, how was that? It's very, very simple. We've got a support level in here. We've got the momentum starts selling off to the downside. Doesn't quite break it there. It breaks and closes below here. You have your stop in there and the market wanders off to make you money. Franc yen, a little bit untidy. From a longer term perspective, well, long term perspective, I'm actually starting looking at going long. But the medium term perspective, we are at the high, so we could start to see this sell off somewhat. In terms of an entry, can't really see one right now. So we're going to have to skip that. And that's one of the keys, by the way, that new traders, they really, really don't pay attention to. So the fact that you can just leave a trade, if you don't believe in it, if for some reason something is missing in that trade, leave it. Just go on and find something else. There are always trades out there. Look at this. Look at all of these trades that are set up this week. So I had this trend line in here, as you can see. The market broke out of that level there. got into the trade, and the market eventually went off and roared towards our profit target. Simple as that. EuroCAD, no trade on at the moment, but what would we like to do? Well, we're kind of bullish this pair, to be honest with you. So we'd kind of like to see the market start to break up. So if we started to get, I don't know, a break above that level there, a close above that level, then we would look to take this long. On the downside, not so sure. I mean, there's quite a clear entry on the downside, but I just think from a fundamentals perspective, we still want to be long this pair. So I'm going to ignore that. Euro pound is just a butt ugly pair to trade at the moment. We'll skip that. Euro yen, we've got a nice triangle in here. So if we do something like this, it's already breaking out actually. Nice triangle. You would have traded the close of this here. Now it looks like it's turning around, but you never know. It might still go in your favor once the market breaks up from this range. Just got to wait and see. Okay, so this is looking like a promising one here. Finally, after a couple of ugly charts, how would we like to trade this? Well, I think we want to be taking a trade to the upside. So what I want to do is start bracketing in this range here. Now that I've got that with my trend line, I can now wait for the market to close above this level. Once it closes above that level, I'm in, I'm long. And then it's just a question of riding it for as much profit as possible. Do you see how simple this is? Could it be more straightforward? Sounding like Chandler from Friends. But seriously, can it be more straightforward than this? We have a couple of lines. We try to read which way is the price going, which I know that can take some practice, but once you've got that practice there, we look at which way is the price going. As soon as we know which way the price is going, we wait for a close outside of the line. We get the close outside of the line. We're in there. We take the trade. Simple, easy peasy, lemon squeezy. Euro dollar, what do we want to do with this? This one kind of missed the boat, actually. So you wouldn't be able to trade this. Oh, by the way, just a quick reminder. We're not authorized or regulated to give investment advice. So anything we're talking about here is not advice for you to go and take the trade. I'm just analyzing the market, telling you what we've taken, what we would be looking at. Yeah, just to kind of help you get better at trading. It's not in any way a solicitation to take a trade, okay? So the euro dollar, the breakout was back here, and unfortunately the market has now turned against you, so you potentially won't be able to use that trade. Pound Aussie, already been a trade there. When the market broke out of that high, then the market started to turn around to stop you out. So this one would have lost you money depending on where your targets were. Pound CAD, you would have to say, looking at it from a longer term perspective, you want to be short, don't you, ultimately? Well, if we get beneath this level here, if we can get a close beneath that level, I would look at taking that short. On the flip side, if the market fails or breaks above, rather, this area here, I'd be quite happy to take a long. But it has to break above. If it doesn't, then it could very well bounce from this level and close back below, in which case I'd be quite happy to take that too. I almost favor taking a trade to the downside. pound franc. Again, this is very, very much the momentum is to the downside, but I don't really see a setup here, so let's skip this. Pound yen, no real setup there for me. Pound New Zealand, yeah, so we could take a break of the trend line here, I think. We take a look. So it's come to that territory now. I've actually, whoops, no, it's literally just entered. So give me a second. Sorry, I'm just putting in a trade right now. 1 second. I'm going to place my stop beneath this level, 17440. It's about 50 pips away. Let's see how this plays out. Pound dollar, nothing there for me right now. New Zealand CAD, nothing either. New Zealand franc could be. Previous level of resistance becomes support. Wonderful. So I will play a breakdown of the Kiwi franc here. So if this starts to go short, beneath this level, beneath this trend line, I will be taking this short. New Zealand yen, nothing. New Zealand dollar. Again, I'd very much like to take a short here. So on a break of that trend line, I will be going short. Dollar CAD, not much. Dollar franc, not much. Dollar yen, not much either. Okay, so do you see how straight, let's see what that position's doing. How effective that can be, how straightforward it is. It doesn't take you very long. We've just scanned through 28 pairs in a matter of minutes. In half an hour, we've gone through 28 pairs there. And I've talked to you about the strategy as well. So for those of you that don't have day jobs that can watch your screens all day, you don't need to watch it all day. But if you were to check your charts, you know, every couple of hours, for example, and you'd know what you were watching. So you wouldn't spend half an hour doing it every couple of hours. You'd spend sort of 5 minutes flicking through the charts that are on your watch list for the day. You can make a significant amount of money. Significant amount of money. Okay? So are there any questions? No questions at all? I am very, very good at articulating things, I must admit. Oh. So what do you think of that strategy there? Is that something that you think you can get your head around? Okay, well, if there are no questions at all, then I guess we will probably wrap it up here. I will say thank you to everybody for joining, as always. Thank you so much to FX Street as well. for putting on these webinars. You know, FX Street do such a great job of bringing education to the retail market, to the home trader market. You know, you get so many ideas from so many different educators, and I really think, you know, you don't have to take everything from everyone. You don't even have to follow everyone. But if you can get little bits of information from each person, you know, and kind of mesh it all together into a system that makes sense for you, then you're on the road to profitable trading. So thank you very much, FX Street, for putting this on, Adinda, for putting this on here. Really, really appreciate your time. Everybody, if you've got any questions at all, please feel free to email me. I'll put it in the chat box. My email is support@traderscorner-online.com. Drop me an email there. I'll be very, very happy to speak to you, give you my comments, help you along. Otherwise, have a fantastic weekend. I know for many of you in Europe, it's you have a very long weekend coming. Well, a long weekend. So today's a holiday for you. So please enjoy your holiday. Otherwise, we will speak to you all on our next webinar next month. Okay. So take care now, and I'll speak to you all soon. Have a great day.